Well, let's move on now and talk to the management of UFlex, the company, which is, of course, a packaging manufacturing company, has delivered a great set of numbers in the fourth quarter. Solid top-line growth of almost 45%. Margins have expanded by close to 10 percentage points, which has clearly trickled down on the bottom line, which has more than doubled, in fact, grown 2.5 times. We have with us Rajesh Bhatia, the Group CFO of UFlex. Mr. Bhatia, thank you so much for joining us today on ET. Now, I remember that we had just had a conversation a few weeks ago on, what was expected from UFlex, and you had mentioned that it's looking really good. Demand as well seems very strong. So it's clearly reflected in the fourth quarter. So tell us, what led that top line growth? First, let's talk about that. What was the mix that you saw? Which industries saw the most demand?
So I think we are into a packaging business, so there is no other industry except the FMCG, so we mirror them. But yet at the same time, because, we had new capacities some of the new capacities that we undertook about 2 years back coming into play in FY21, later part of the year. So that has helped us to grow our volumes by about 44% in the Q4 and given us an overall volume growth of about 22% for FY21. As we commission our Nigeria as well as our Hungary projects, and as we do more capacity expansion, capacity utilization of our existing facilities, I think we are set to achieve another 20-25% growth in FY22 and beyond. So that's what we are currently envisaging for FY22 and beyond. Yes, the demand was also strong. That helped us to, get those volumes faster. But, and obviously, in some of the territories we were in, because we were fully sold out for many years, so we had sort of reached a level where we couldn't grow our business. And yes, the customer demand was there, but that was being met by somebody else. And we being present locally, there is a huge focus now to reduce the logistics, the supply chain as short as possible. So all those things have helped us in FY21, and the similar things we are expecting in FY22 and beyond.
So can you just talk to us, in the post-COVID world, how has the packaging demand changed? I mean, had you had to do some changes to your packaging to make it COVID-proof? Is it something which is now yielding results where a lot of companies are focusing in on proper organized packaging?
So I think the COVID-led demand was in the category of pouches, which are being used for packaging the sanitizers as well as the liquid soaps. So that there was a pent-up demand for that, but largely, as I tell you, 95% of our business comes from food packaging, and that demand was also very strong, and there was more urge to buy packaged products given the protection people were looking for in terms of buying something which is just. So I think overall, the new product categories got added, which I just mentioned. Food remained the staple business, food packaging, and helped us let the volumes grow in FY21. Packaging business overall for the year, yes, we had about 17% increase in our volumes, which is sort of the best in the last 4-5 years what we have achieved in this. And there we will focus more on the value-added products rather than some of the products which are actually low-margin businesses, and would like to move up the value chain over there rather than adding any capacities as of now in that business.
Okay, Mr. Bhatia, I must ask you about polypropylene prices, one of your key raw materials, as well as other raw material prices. Just today we are reading about crude hitting $77 per barrel. Many are now pegging a figure at $80. So, are you dependent on crude or its derivatives? To what extent? And if you could just give us a gist of raw material cost increases, and in light of that, if you're going to be able to maintain these 17% margin levels.
I think we have broadly ever said that, the crude prices are more or less a pass-through in our business. Our raw materials, which are linked to crude, are a pass-through. And we've seen that happening over the years. So not too bothered about that. And, that disturbs your working capital requirements a bit because, you buy the raw material costly. And you have, the receivables which go up, so the working capital cycle becomes larger. But beyond that, I think that's not too much of a concern for us. But, having said that, we had about 30% resin prices going up, which are used in the BOPET films in the last quarter of FY21. In the month of April and May, again, we had increases about 7 to 8% increase subsequently. Similarly, on the polypropylene prices in India, we had about a 17% increase in the Q4, and we have a 10%, further jump in the prices thereafter, and these are all, very well-known commodity pricing indexes which one can track. So there are raw material price uptrend continuing, which is also reflecting in the finished goods prices also. So we expect that, the margins would, take a bit of will be damned a bit. But I think we'll make up with those extra volumes as we have, we're targeting about 20-25% higher volume. So that will bring down our cost of operations overall and will still give us, that extra bit to compensate against the margins coming down because of the raw material price hikes.
Thank you so much, sir, for taking out time for us. Always good to get perspective from you. On that note, we're taking a break. Coming back quickly. Stay tuned.